Many of you have probably heard the term seller financing from time to time and have wondered what actually is seller financing. Well, seller financing in the most simplistic way is simply where the seller takes on the position as the bank. Like you'd normally see in BMO, TD, CIBC, but in this case, the seller is the bank. And with an agreement for sale, which is just a subcategory of an option for seller financing, with an agreement for sale, the seller actually maintains their name on the mortgage for a period of time that's negotiated between you as the buyer and the seller. So simply, the seller keeps their name on the mortgage, so you do not have to get a mortgage on possession date. Sounds pretty cool, right? So the benefits to a buyer entirely and why you might want to consider seller financing deals is maybe you're at a limit of capacity, you can't get a mortgage, maybe you run your own business and you don't typically have like an A lender that will lend you any money until 2 years of experience or history. Maybe you don't simply want to get a mortgage right now, right? So the seller can offer benefits in all those three areas and more, and even a lower down payment. So a lot of times, if you're looking at getting into a property, it's 20% down. In a lot of seller financing deals, you don't have to put down 20%, it's actually less. And then you have that entire term to determine what you're gonna do. Are you gonna sell at the end of the 1 year, 2 years, 3 years? Maybe you get a JV partner to take on the mortgage, or maybe you get a mortgage at the end of those years, right? Completely up to you. And the nice thing about through that period or that term is you get all the benefits as a mortgage pay down. So if you agree to a 2-year agreement for sale with the seller, on possession date until the completion date, you get the benefits of mortgage pay down on that entire process. Pretty cool, hey? You may be thinking, okay, Calvin, this sounds great for me as a buyer, but why on earth would a seller want to provide this option? Well, it's simple. 2 main reasons why. First reason is that maybe the seller's looking at getting a slightly higher or being more competitive in the market, okay? So offering a solution to a buyer makes them stand out, right? There's so many sellers out there. How are you gonna stand out from the rest? Offering seller financing is a great option. Second part is that a lot of these sellers may have a current mortgage that costs them a lot of money to break, meaning that that renewal date is probably sometime in the future and it's gonna cost them a lot of money to go ahead and terminate that mortgage mid-term. So by allowing that term to ride itself out, not only helps them with getting more buyers involved with the property, but it can also improve their ability to hold on to more money and pay less penalties. Those are many reasons